All right, welcome back for the episode of Carnivore Trades. Today is Thursday, October 12th, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis here. Just closed out another winner today on WBA. So this is one I did a video on a few weeks ago. They had earnings today. Really beaten down stock and announcing a new CEO, getting some short covering in there, but over 10% gain on that one as it is up 6% on the day. Nice trade there. Could even get up to 25 here, but I'm kind of coming into that 50 MA right now and just locking in that gain for the time being. Anyways, let's get into the spiders here. So they actually had a little bit of a rollover, so down just under 0.7% currently at 3:10 p.m. We'll see if this rolls over a little bit further, see if bears take control of this. We had a pretty good outsized move around 1 o'clock. And if we look let's look on an hourly here. You can see a pretty good outsized move. We're getting a bounce right now. I would assume there's going to be a little bit more downside tomorrow. Like, we're not going to have that kind of an outside move. Look at the 4 hour too. Pretty good outside move there. Gap up and then kind of gap and crap essentially. Usually you're going to get a little bit of follow through here from that. Doesn't mean it has to happen right away, but pretty good reversal here. What happened? Well, there's a few things to talk about. So this morning I talked about the triple Qs, and I said, look, this was in the shorts video that I did this morning. Again, give out a lot of alpha in those. If you're not tuned into them, because I give out a ton of alpha. But take a look at the trend line. We tagged it, and then you hit a 618 perfectly. And I was sitting here all morning, like, looking at this, like, I can't believe this isn't coming back in. Just kept holding up. And then all of a sudden, bam, we got a huge dump in the middle of the day. Finally got a reaction off of that. What was the reason? Well, the market seemed to just not care. It seemed CPI was priced in, right? I kind of talked about this yesterday. Look, oil and gas make up a lot of it. And there was a recent drop in that. So we expected the market to be kind of mildly reacting to that, even if it was a hotter than expected number, which it was slightly warmer than expected, but nothing crazy. And so the markets didn't really care, and we started to bid up. But it seems the market forgot that there's a lot of treasury issuance today, and I believe some more tomorrow. And we had a pretty poor bond auction. And you can see yields here via the 30-year. Talked about this possibly bouncing at the 20 MA yesterday. And look at that move on the TYX. So big surge there. And what does that mean? Bond prices go down, TLT getting hit. It is coming a little bit off the lows, though. So again, this whole thought that, the Fed's done hiking, bond prices are put in the bottom here. That kind of got thrown out the window. I do think the Fed is done hiking. The TYX is kind of doing the Fed's job for it. Even Fed President Daly said that a week ago. So the recent climb in the long end this is kind of what the Fed's been trying to get, right? They've been saying for the longest time, like, they want the long end up and those yield curves to normalize, and the market needs to just expect inflation. And so financial conditions can tighten. The Fed stopping hiking, though, is not a good thing, right? So this is when they paused last time. This is when they paused this time. Historically, it's not a good thing because it means they know something's coming down the pipe. We do have bank earnings tomorrow. I believe Bank of America, if I'm not mistaken. Let me just double check on that because I want to make sure that is correct. JPM, Wells Fargo, Citigroup, PNC, and BLK. So not Bank of America yet, but in any case, we have some bank earnings kicking off tomorrow. I don't like these bank charts. Maybe we could see some short covering in them, but as I've talked about this quite a bit recently, looking at the XLF, rejecting that 20-day moving average. We'll talk about that in a second. But a few other things, too. There's a lot to cover. If you remember last week, I said there is a possibility, right? And again, this is just one little day. We could close at 43.50. Nothing to say that can't happen. But, we could do a 1, 2, 3, 4, and then put in a fifth leg. I want to show you guys AAII. I don't talk about it all the time, but I talk about it when there's big jumps. And you can see here, I talked about this last week. I said, you get everybody bullish with a little squeeze, and all of a sudden you can have another leg down. Look at how the bulls jumped 10% this week, and the bears dropped about 5%. So this is a little dangerous, right? You just squeezed all the shorts out of the market. That's how you get big declines. Another thing I brought up is, looking here, again, ask yourself, Let's look at an hourly. Did we build support on the way up? The answer is no, right? We just squeezed up. So there's, I mean, you could argue this pivot here would be some support, but that's really it. So, and market's trying to hold this area here on the SPX. It's trying to backtest that, and it's holding for now. We'll give it that. Again, it's just one day. We could follow through to the upside tomorrow. It could just be a pullback. But again, this is kind of how big declines happen. I told you last week, what was one of the things I said? Like, the risk isn't down here. The risk is when you come back up this way, right? So just be careful. But right now, the market's trying to hang in there. We'll see how it trades into the close. At this point, it probably looks like a 43.50 handle. But at the end of the day, again, I'm doing the video a little early. We'd have to live stream with members at 4:05. But in any case, nice little dump there. I think we do have some treasury issuance also tomorrow. By the way, dollar index also getting a big bid. And I talked about this as well. Said it should probably bounce here over the next day or so. I said, no, the trend line's broken, but usually that third hit is the fake out, and dollar really ripping higher here. So we'll see. That's not a terrible pullback on the DXY. You still have this weekly kind of shooting star candle, so this could just be a retrace of that. We'll have to see where we close the week. It'll tell us a lot more. But again, market's coming back down to earth here, and I mean, we just got very short-term stretched. And again, QQQ going into that level, it'll be very important to see how this trades. Does this just hold up here, or does it pull back? And if you start to take out 362, then it starts to become a red flag here. But nice little sell, nice volatility. I always like to see some action in the markets here, and we see the VIX coming in. So it looks like we are getting a little bit of a continued bounce as we get into the end of the day. Anyways, so triple Qs, again, watch 362. That's going to be your big support level here in the short term. And again, if we just take a fib right here, you can see you got the 50% fib. This is the area you broke out of, 362, right? So pivot, and then those pivots right there, 50% fib. That would be a big support level in the short run on the Qs. There's also the possibility we just pull back and flag here. There's nothing to say that can't happen. But again, pretty good volatility. I do think we at least would follow through a little bit to the downside tomorrow, just because we had such an outsized move with volume. But again, market's trying to stabilize here, and we'll respect it. Now, another thing I talked about this morning is breadth is absolutely awful, right? So look at the Russell here, down 2.3%. It was only down 1.3 earlier when I did that video, rejecting that 20-day moving average. This might get down to that head and shoulder target after all. So, I mean, you just wiped out all this, basically the last, those last 3 up days there, you wiped out essentially in one session. You take this low out, it's going to go to 165. So, again, breadth is terrible. If big tech was flat and not higher all day, I think this market would be in much worse shape. The advanced decline was not very good today, and obviously it's worse now. But Russell and the Dow as well, we're really down all day long, save for a little minute where we had that little minor float up in the middle of the day. But again, it's really just been the big tech show. And I know it's, the Magnificent Seven, that's all that matters, but at some point breadth has to pick up. Another thing, not to get too sidetracked here, but if we type this in, I'm going to show you guys inflation adjusted. And I'm just going to use equal weight. So this is the equal weight S&P adjusted for inflation. This is not anything that represents a bull market. Even if we look at the actual S&P adjusted for inflation, it's not much better here. So again, at some point, it has to be something other than big tech. This can't go on forever. But in any case, right now, it is the big tech show. Diamond rejecting the 220, trying to put in a daily higher low. That's what you can shoot for here in the near term. If we take this low out, probably going back down to 331.45. All right, I know I'm getting long-winded here, but there's a lot to talk about today. So SMH, we talked about 353. It actually overshot that a little bit, got to, 153. It actually got to 154.06 today and then pulled back in. It is below 153 now. A little bit of a spinning top there, so that might need to pull back a little bit more. And again, same thing as the triple Qs. Where did you go? Oh, right into the 618. That's why I said 153. And it pierced it by a little bit, so this may need to pull back some. But again, it's hanging in there. and it's green on the day. IGV also stalling out here. Got all the way up to 350, almost to 358. I think we talked about that yesterday. We'll see what kind of pattern it puts in, but you did reclaim trend, so we'll respect that for now, and we'll just watch that on pattern. I don't really have a position or a bias in that right now, but I'll give it a slight upside bias for being above those moving averages. Transport's on the weaker side, down 1.2. This needs to put in a daily higher low as well. I like how you got above this trend line. You're trying to back test it right now. But you're still back below that 20. You desperately need to put in a higher low. This will be helped out if crude can continue to roll over, which I think it does at this point, which we'll talk about again in a minute. But transport's trying to hang in there. Short term, you get above this level, we can get up into the 15.250, 15.3, and then of course 15.5. All right, interest rates here. So we'll flip back over. So let's start off with the 2-year as always. So 2-year up 8 cents there on the yield, trying to reclaim this red bar high and just kind of wedge between the 50 and 20-day moving average. Again, trend is up. I don't see any problems with the 2-year, but it did back off the highs. So again, it's just a bigger picture consolidation pattern. The weekly, there ain't nothing wrong with that. And if that breaks out, it's going to be a huge problem for the market. Just trust me on that. 5-year. Again, holding up as well. Same thing below that red bar, but the trend is up. No real problems. 10-year holding on to the 20-period moving average. Bears here, you want to see a lower high. And the same thing with the 30-year. You want to see a lower high here and then take this low out. If that happens, you're going back down to this breakout area. But again, trend is up, and you got to respect it. All right, XHB here. So that got hit pretty hard. Pretty good outsized move. So we talked about 78. Never quite got there. So a nice little surge there, but lower highs still on the daily. And again, interest rates finally affecting these home builders. When you see rates go up on the long end, it tells you market is expecting more inflation. And I think the market was kind of operating on this idea that rates were going to come back down to zero. And that's why XHB was continuing to bid. Again, also inventory numbers and all that stuff. But in any case, right now down almost 4%, touching the 74 handle. You don't want to lose this low here, otherwise it's vulnerable down to $70. VNQ, I don't like this. So, it could be a tag and tank setup, extended into the 20, and outside move down today, down 1.5%. You really don't want to see it close the week again below this white trend line. But right now it's trying to hang on by its fingernails there. XLF here, we talked about briefly. Again, 20 MA rejection. Still has room for a higher low, so that's fair. Again, we have bank earnings starting to kick off. I don't know what's going to happen. We could see short covering in the banks if they report, decent or at least in par, in line with expectations. That's certainly possible. But again, these rates are definitely going to hurt them, and the inverted yield curve is going to hurt them as well. Short term resistance around 34, and you got to hold. You got to put in a higher low. So it's a simple case there for the XLF. For KRE, back below the 20 moving average, watching this for patterns, still a lot of resistance around 43. But if this can firm up, maybe you can have another push higher. Really needs to hold this pivot. Otherwise, there's some bigger problems in the market. KBE, again, still looking at 38 for resistance. So nothing has changed there. Again, needs to hold that pivot as well. And KBWB, again, below that 20 moving average, needs to put in a higher low as well. Broker dealers also lower today. Did I tell you 475? I think I did. 476.85. So pretty close there, and they came off the lows. Still kind of a neutral chart right now, though. All right, crude here did fade off of the highs today. A little bit of a doji candle, retested the 50 MA, so I don't like that. So to me, I think crude, especially if you start to go sideways here, could be setting up a bear base, possibly for a push down into 77, 78. That is good support here in the short term, but crude on the weaker side. And again, that can help transports out. But again, we have the inflation trade going on with yields. There's a lot of cross currents going on. So crude kind of underperforming here. It's a sign that the Fed's pivoting. It's a sign the economy's weakening. But we still have yields going up. So a lot of cross currents. Just be careful. But I would say the chart of crude itself is definitely weaker here. So be careful with it. XLE, I am not touching that. Look at the volatility there. That's got to firm up. Right now, support is still around 85. Resistance all the way up around 92. I'm not touching that. It's in no man's land. XOP a little bit firmer. I'd say this could get to 150 if it can flag here, but you still have a fat gap there on the daily. Just be careful with it. And OIH, little gap and crap day. 50 and 20 moving average holding on the daily. But we had a nice bid off that 20-week moving average. Again, there's a big gap there as well, so I'm not doing anything with these ones. CCJ, I'll talk about this little inside bar. Tried to play out a little bit. We'll see what the weekly close looks like. That will tell us the story. That's all we need to worry about. And then URNM also rolling over just a little bit. Unable to hold that 20 moving average, so on the weaker side. Nat gas inventory day for that. And it's basically down 2 cents. It's flattish. Could be putting in a flag here. Not convinced that this does want to pull back a little bit more, but you had a deep cut yesterday and it bounced right back up. So that's kind of what happens when something's in a bull market. It behaves well. Little test candle. We'll see if this consolidates sideways or pulls back. I think any dip is for buying here. Dollar index we talked about a little bit already. But again, I don't know about levels here in the short term. I'd just say give it the upside bias to 107. If you start to take out this high, especially on a weekly close, then I don't know. All bets might be off here on the DXY. The reason I say that, the reason why I wouldn't bet against the dollar is, yes, you are into weekly resistance. But again, I've said this before, but the monthly trend is very strong. So, just respect it here. Yeah, you have that big monthly red bar, but that's a strong monthly trend. Look at those moving averages. So nice separation there. They're trending up. Just be careful with the dollar here. All right, let's flip over to gold. So gold pulling in. What did I tell you yesterday? It's going to go to 1900 and probably backs off there. And that's exactly what happened. Let's not make too much more out of it. Silver, same kind of deal. Both gold and silver looking to put in daily higher lows. If they can do that, they can get through those resistance levels. Platinum also rolling over as well. I think that has one more drop in it. Then I can get interested. And then palladium here, still got to get sub 1100. Copper rolling over as well. That needs to go to 340. All right, Bitcoin lastly. So this had a little breakdown yesterday, but we did manage to hold this trend line here. And you can see we look at this close, 26,895. And the low here is 26,984. So we did close below that green bar. That's a failed bull flag to me. And you're kind of holding this trend line. You're holding 50 moving average for now, but I'm going to say the daily is now bearish and the weekly is now bearish. Your positive is the monthly is still bullish. So, but this needs to kind of get going soon, right? You've had 3, 6, you're working on your 7th month here. I like the consolidation beneath that red bar, but you need to kind of get going here within the next month or two. Otherwise, I think it's going to be considered like taking too long. And when that happens, you can roll over, kind of like right here. Like this should have broken out, right here. You had a chance, and it kind of just took too long. So something to be aware of, but we did close below that green bar, so that is failed. Just be aware of that. All right, let's flip back over here to the spiders. So coming back in just a touch here, it is about 330. One area I'm watching, well, we'll probably close right around 43. We'll probably close right in this range. Maybe 43.50. But again, nice dump here. Short-term bulls here, you just want a higher low at some point, and you want to just firm up and flag here. The bears, you kind of need to make a statement, I think, going into tomorrow, especially if you can close back below 43.35. That would really set the tone as a possible failed breakout this week. I mean, if you could also push us back below, if we could close at 4,300, that would be a red week too. So keep that in mind. It's only 50 points away. If we get some more downside, if you get that treasury issuance and yields to really start to perk up again, that could easily happen. So just be aware of that. But right now, I would definitely be neutral in the short run until this market kind of proves itself in either direction. Also, keep in mind earnings this week and next week. Also, OPEX as well. So there's going to be lots of whipsaw starting to rear its head here as we get closer to that monthly OPEX. Anyways, guys, can wrap it up here. You guys take care. Come find me on CarnivoreTrades.com. Talk to you guys all tomorrow.